I'm back, folks. All right, it's going to be a short little market review for Monday, February 3rd, 2025. All right, this is a 15-minute time frame chart for NASDAQ March delivery contract 2025. And once you take note of this large gap in here, is electronic trading hours. So there's this settlement price on previous Friday and Sunday's opening price. So that's your new week opening gap. And I want you to take a look at how we dropped down, created a low in the morning session there, came back up and slowly grinded back up into a gap closure there. 5-minute chart, same new week opening gap. It's a gap lower or a discount new week opening gap. Market rallies up. Again, relative equal lows, sell side there, and the market breaks below that and then sends it back higher into the gap. All of this price action in here, I'll talk about that when we get down into the 1-minute chart. All right, so here's your 1-minute chart. Previous Friday's settlement price on the close. That's your new week opening gap high. Opening price 6 p.m. on Sunday evening Eastern time. That is your new week opening gap low. Why is that? Because it's lower than where we settled on Friday. So we have a discount new week opening gap. And putting the fib on the closing price on Friday and the opening price on Sunday 6 p.m. Eastern time. That gives you your new week opening gap gradients. Here's the lower quadrant, consequent encroachment or mid gap, upper quadrant, and then the high. All right, now here is the opening range gap. We're going to be using it on regular trading hours, previous settlement, and then the 9:30 opening price. That's what that is there. And you're going to draw your fib from Friday settlement down to the opening price of that candlestick at 9:30. And then the fib, here's your lower quadrant, consequent encroachment, upper quadrant, and the high, which is previous day settlement. In this case, it's Friday. Now we're going to blend and add both the new week opening gap and the opening range gap, which is what's shown here in the chart right now. Okay, see there's a convergence of the lower quadrant, the consequent encroachment, and the upper quadrant. And the market finds some support there, here, here, and consolidated into that. First presented fair value gap. I know it's small, but that's what you have to note. Then we have our bearish SIBI. Market trades up into that, breaks lower. And if you go into the Telegram channel, you'll hear the audio clips I gave in guidance this morning for tape reading the market. Real quick, let me remind you, my Telegram channel is not a signal service. I'm not trying to put you into trades. I'm trying to teach you how to follow the delivery of price action. Look for reoccurring patterns, reoccurring uh, runs on liquidity, characteristics that tend to repeat. Also, just teaching that we can see very easy low-hanging fruit objectives be met. So draws on liquidity is the primary function of my Telegram channel. My executions are not meant for you to be followed. Obviously, I shared my stop losses today. I explained what I was looking for in the beginning of the day. My interest was the new week opening gap, consequent encroachment. Okay, you can go back and listen to that. When we were trading lower, I was saying that we're in no rush. We're waiting for them to set the snare. Okay, that means the market's been going lower. I want to see something in my PD arrays fail, and I'll teach what that was in a moment. But once it starts to trade higher, my interest was I wanted to see if we can get back above the first percent of fair value gap at 931's candle on 1-minute chart. And then above this SIBI here, and then that SIBI should turn to a inversion fair value gap. Now, in my haste, you'll notice that there's a volume imbalance in here that should be anchored to that. And you'll see that that candlestick's high right here would be flush with that high. But I have old age. My eyes are not what they used to be. So when I'm dropping these little rectangles in, sometimes I might be off. So when you're doing your own annotations, just be mindful that if there's a volume imbalance inside of the inefficiency, always include that, okay? But that inversion fair value gap here, I want to be going long, aiming for this area up here, okay? So we walked through this morning. I gave you some ideas with minor sell liquidity pool, which I'll show you in a moment what that was. But I'm encouraging you to go back and listen to the audio clips and look at the time that they were posted, and then look at your 1 minute chart, okay? But in here, in this little tiny little section right there, my entry is trying to get as close as I can to that line right there, that midpoint. So I watched this candlestick go up, and as it was retracing back down in, I aimed for that. And the next candle, I waited for it to open and then start rallying back up into, and then that's when I set my stop loss. So what I was looking for is it to create the low of that candlestick there. And if you look real close, there's a little separation between this candlestick's high, that candlestick's low. That's a breakaway gap. Okay, so the market rallies, comes back down and finds some support at the lower quadrant of the new week opening gap, and then rallies higher into my target. Then it went into a rather sloppy consolidation, which is exactly what I gave guidance for and to anticipate that. And I wasn't interested in doing anything with that. So I wasn't interested at that point whether it closed the gap entirely or reversed and went lower. I just was done. I found my setup, and I'll show you what that was. Here's a 15-second chart. We're zoomed in. There's that same little area right in here. And if you look at what we got now, here's the execution. You can see where I placed my stop loss. Speed this up a little bit. So I'm buying 3 contracts as it goes into and retraces into the consequent encroachment. I have a little bit of heat here. Now, as soon as we get there, I'm setting the stop loss. See? There you go. So my target is drawn to new week opening gap, consequent encroachment. And you can see how that delivered. And I'm going to take you up to the first partial. Then I'm trying to encourage you to go back to the Telegram channel, or go to the Telegram channel, which is not monetized. I don't make any money from that Telegram channel. But the idea is for you to listen to me how I'm moving the stop loss, when I'm moving the stop loss, and to where. Okay. But I just want to show you the first partial here. I wanted to show you the initial stop loss, why I was waiting to set the stop loss. It was based on this candlestick after my entry candle to trade back into the consequent encouragement. Once it did that, I felt confident that it would not come back down here because this would be a breakaway gap. And once it leaves the inversion fair value gap, it should not come back down into it. Above this high here, anything above that would be a wonderful candidate for a partial. And you'll see me do that. The volatility of the market today was really, really high. So that's the reason why my leverage is a lot lower, because my stop loss is around 20 handles. That's just a little bit higher than I normally have it. And there's the first partial. So zoomed in on a 15-second chart, I want you to see how hovering over top of the entry candle, you can see that little area right there. That's where the actual entry was. So I was real close to that midpoint, watching it, manually entering that. Had a little bit of heat, not by much, and then it rallied back up. The next candlestick right in here, partial, is here. And then this one here, you can see the exit there. And finally limiting out on the balance there. So entry, first partial, second partial, final target right there on the new week opening gap, consequent encouragement. Real easy bread and butter setup. Okay. The trick is waiting for that trap of traders looking for lower prices. In all, over 140 handles or 562 ticks. And if you go back and listen to the telephone channel, I will be prompting you to look at this fair value gap here. And I said, once we were in here, I want to see it trade lower. I favored it going lower, and it did. And then that was your first failure. Okay, so that was the indication there. I said, okay, then that was when I prompted everyone. Right when we were down here, I said, you want to screenshot that? And that's what a 20 handle scalp looks like. Okay, using very easy fair value gap, get 20 handles, move to the sideline. I'll tell you what this is in a moment, why it turned there, but I wanted to see something that would be bearish be overtaken to the upside. And that's how we know that the bait has been taken and they trap traders. So that all the manipulation has been done with this drop down, but it's very, very hard to read on days like this. So I have to force myself to wait for these types of scenarios where I offer a PD array. I'm committed to watching it, and even initially how it starts off, go back and listen to the Telegram channel. You'll hear me say, screenshot that. That's what 20 handles look like. So that's against what my primary focus was in the morning, which was the consequent encroachment of the new week opening gap. That was what I was interested in. That was my initial interest, and that means I'm bullish because we have an extremely low opening range gap and new week opening gap, and everybody's going to want to dog pile in and go short. So that's what all this is. This is all, luring traders to go short so that way they can rip their face off and then use my PD array here to get long, partial, and an objective at new week opening gap, consequent encouragement. Here's the minor sell side liquidity pool I was highlighting in the channel. There was a small one here, but right in here, this is a bullish fair value gap. That's what was dropping down. And once it goes below here, that fair value gap I told you to watch real time, it dropped down in that. And that's why I said screenshot that, because now I'm talking about it. You can hear it. And then the market rallied higher. If it would have kept going lower, you'll listen to a sound clip where I had 20,980 as a sell side liquidity pool. If I was not going to get a rip higher, I was not going to go short. It wasn't interesting going short. My interest was up here. And then seeing that PD array here fail aggressively, first percent fair value gap, you can see it trading above it here, and then it creates that little gap inside of this old SIBI, sell sign of balance, buy sign of efficiency. I'm going to trade it as an inversion fair value gap. That means it's reversing its role from where it was bearish here initially. Now I'm using it to anchor a bullish idea for my entry going long, targeting my consequent encroachment of the new week opening gap. Very, very simple, but not easily executed on in a day like this. I mean, the volatility, like I said, is extremely, extremely high. I usually like 10 contracts, 15 contracts, but when the volatility is this high, you have to scale it back, folks. I understand everybody wants these grand slam home runs, but you can really get hurt fast when the volatility is like this. And it's a little bit more difficult than the average run-of-the-mill trading day. And it's because of the tariffs and all of the trade wars that's about to take place, and which has actually officially began. So I will look at Forex tomorrow. That'll be part of our morning repertoire now, and I'll give you very simple little scalping ideas for the draws on liquidity. Not trade ideas, but to tape read and look for the next draw on liquidity. Hope you found this insightful. Until I talk to you tomorrow, Lord willing, be safe.